None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. It is Monday. Seemed like it was just Friday, but I don't know how fast that weekend went for you folks, but it was like lightning fast this weekend. Anyway, here we are starting off a new week. As I talked about in commentary, most of this week is going to be about earnings, even though today it's about the Ukraine. And it is interesting that it's almost hard to find a story on a ground war in Israel. I'm not sure what that's about, but seems to be more intense than the airplane that got shot down. Not that that's not a terrible thing. Just it seems like more of a military operation would be of more concern. But anyway, yeah, we're continuing to see the market. Unfortunately, we've taken out some of the support numbers I talked about. The 74 even, 69.30 was a key level for today to keep it on a positive side. So we're no longer looking for a positive close today. And we'll get into some of the more details here in a minute. But we have traded down to, toward the S2 on the weekly already. And last week we did an S2 and an R2, which is resistance to and S2. So possibly, depending on how we end up trading into the day, we'll go into details on this. Maybe we're printing the lows for the week already. News? What news? Right, Mitch? We were just looking. There's nothing. Okay. I guess the international stuff is all there is to talk about. You saw nothing, right, Mitch?
Yeah, I mean, as far as anything economic related, there is no news. All the attention is either on the border down south or on the plane crash or on Israel, and most of the major guys are looking at the plane crash right now.
What border?
Yeah.
It's getting crazy here. People are in Arizona and I guess Texas as well, especially the southern states. We have relatives down about 90 miles from the border in Texas, and it's pretty tense down there, from what I understand. And anyway, so from I guess from the standpoint of what is going to be going on this week, there's the overall economic calendar is pretty light, but I think we have about 700 earnings coming out. And I said in the commentary that it goes from Amazon to Verizon or Visa. I think everybody is releasing something this week. We got Apple and Microsoft on the same day. I guess that hasn't happened for a while. So it's going to be an exciting week. I think all of this stuff that we're focused on at the moment, it appears at least every time we've had any kind of so-called geopolitical risk, it's been an opportunity to buy. So I guess if you got some money to put to work, not a bad day to start, with the downtick going. And that's kind of the things that we're gonna get going here. I think I don't know this. We're going to do our usual show that we start off in the week, and we're still keeping our summer hours. It's amazing how many I'm out of the office, and I wish I was as lucky as some of us, I guess, to actually be out of the office and not very close to. Can't even get emails. I mean, I just don't do that. So it must be nice to break away at that level. Maybe someday for me. But the so what we're going to do here, we'll go through our usual thing. We'll go in and we'll look at the indices. So I'm going to switch over to the screen here, and before I do, real quick, I need to adjust something. I am giant on this screen. I did not want to be that big, so just Mitch, talk to the folks. Tell them something. Tell them a joke or something. Just kidding.
A joke, yeah. Well, it is pretty funny to think, all the activity that's happening with these border states. Where I'm at, we're also border states, but we don't get quite the influx of the Canadians coming through, trying to break through our border. So
no, that's true. All right, well, I got it all adjusted, folks. We can get to work here. I was about half of this screen. I don't know how that happened. Playing with some of the settings in the studio. Anyway, down 786 on the S&P right now. We got composite down 16 and Dow Jones down 70. And so the same components that we've been talking about all along, we still have a going through. Matter of fact, I'm going to go off screen here just a minute after all that. Now I'm just going to get off the screen. But the elements here, ppm 1, 2, and 3, plus 0.48, 28, and 30. So we've seen some moderation just a little bit, but these are still really good trend numbers. So as far as, oh my gosh, is this the top? The answer is no, it's not. It is just another part of this consolidation we're seeing. So we still have good trend levels. The probabilities still point very highly toward the market going sideways and resuming to the upside. I tried to reiterate some of the commentary elements that I've been talking about for a while. A couple short-term objectives off the daily, and we'll go through that in a minute. 1993, 2009, and 2019, and then on the intermediate, 2034 and 2072 are still valid numbers. And so several weeks ago I talked about even some bigger numbers on the upside. I guess the fact that just about no one wants to believe the market can go up anymore, and all you're hearing is about overvaluation. There must be a ton more to go. If you're a contrarian, you got to be going, I don't think this is what's going to go on here. But from the standpoint of what I'm seeing from a trend level, from what we're looking at, we saw very little movement in VPM this weekend. We'll go through that shortly. Mitch always covers that section. And just not a lot going on in the database, and not a lot going on in the trends, other than it's more of the same. Let's switch over to the daily real quick here, and just take a look at the daily. We're seeing a couple things here where I'll bring up the whiteboard here, and just so we can talk about some of this stuff here. Is this pattern is becoming more and more, I guess this is our little pattern that we've got going here, and it's just basically trading within this pattern. This is the trading range. The broader range is 1852 to the 1952 to 1985. We got up to 83 the other day. Looked like we're going to break out. Everything that I was looking at last night and over the weekend looked like this is the week where we get into new highs. It still could be. I don't see any total damage from a trend standpoint. If we take out much of this, 1963.70 is actually the S2 on the weekly. If that were to be taken out, then that could bring us some concern. That would next number below that's 1956. I don't see that happening right now, but we'll see how it plays out. You never know with some of this news how the markets are going to react. They seem to be quick because of the folks that are worrying about a top. They're going to be quick to sell, but I did think it was interesting that you're even being warned not to buy the dips right now. So even if you're not selling, don't buy the dips. So I think from a standpoint of deploying capital and what we do, you continue to do as new clients come in. You continue to deploy the capital as it comes in. As far as these patterns go, it is more of the same. We have a slight negative now on the ppm 1, ppm 2 and 3 are 0.02 and 0.09, basically flat. And this has been the case, as you can see how I draw some arrows in these indicators. They have been drifting lower, staying in a range, so it's just not any activity whatsoever as far as this trend breaking out. One of the things that was interesting, I will bring it up real quick because I was looking at it earlier, is this this pattern that's already starting to firm up already. I looked at it earlier this morning. This is the 60-minute graph, and on the 60-minute graph you can see there's almost what you'd call a perfect, as soon as I get my whiteboard up here, perfect head and shoulders bottom forming. And what that means is we would get a projection up to these levels, which would be that 2009, maybe 2019 would be the next level out of a pattern. This is just off a 60-minute graph, and this is every bar is 1 hour, so you get about 6.5 bars, 7 bars per day to go through. So anyway, this pattern here, to me, looks like it's already started to firm up. You got ppms increasing on the short-term level, and then it just won't take much movement, much recovery from here to see the other two indicators that I just drew arrows on actually start to respond to this and start to see the markets get to be a little better there. So let's go to a couple other charts that I'd like to look at here, and that's going to be the some of the 24-hour futures charts. Cycles, just a cycle just came in just shortly here ago on this rebound, so it looks like this may be a point of a minor top, maybe consolidation, and this cycle runs about, I think it's, let me just see what it is. Yeah, it's a 66 bar cycle right now that's hitting. So that's quite a few. Whatever 5 by 66 is going to tell you how many hours that is. So wouldn't it? No, I guess 20. So it'd be about 3 hours and 15 minutes. So toward the end of the day, we'll see this thing start to firm up. In that last hour, it should be another cycle. So if we maintain the low that we had today, we should see some recovery as we come into the end of the day. And as I mentioned, there's a fair amount of earnings coming out after the close. But there's also a ton. Like I said, there's like over 700. I think there's 200 today. Isn't that right, Mitch?
That's right.
Yeah. So anyway, yeah. So let's go and look. This is the 5-minute graph, really short. Let's look at the hourly graph, 24-hour futures, and you can see that at one stage this thing has rallied back and then pulling back a little bit. So there was a point where there was much more weakness there, and it's just kind of rebounded, as you can see, over the last guess day and a half or so. So the recovery here, this is also starting to show a bottom. The swing index, which when we get our, I'm hoping that August 1st, we're trying to finish our TradeStation release, and one of the things we'll be doing is talking about the different elements, the swing index. These are all embedded inside of EPM 2.0. So this is the swing index. Usually you'll get a more of a drastic move. You can see down here where, if you see my cursor here, it was much more extreme at the low. We've got another spike down, and we have a little volume, what we call a rate of change volume cluster here, which is usually a sign that this thing is turning here. It doesn't look like a major turn, but it certainly looks like a turn, so we would retrace back into this pattern, which would be from about an 8 to 10 point rally right now, just off the hourly graph from the futures viewpoint there. And things I also try to keep an eyeball on here is these are what I call the webs, and I guess when we get that out, we'll talk a little bit about how this is. This isn't an indicator, but what we have planned for the release is there'll be pages that you'll be able to just load in and you'll be able to have a lot of the same pages and analysis pages that I have. You just have to put them in a directory, and they'll be right there to load up if you so decide to take a gander at this this new product. These webs here, what they do is they're really primarily for pattern recognition, looking for trending and topping patterns. This is a very the sideways patterns, you can see it's defined there. It's very similar, only it's contracted, I guess more of a tighter pattern that we had here earlier, but this pattern is very similar. Like I said, everything points that this thing will poke out of the upside here and will continue toward these objectives I talked about, 1993 men and 2009 to 2019. And I discussed a little bit, and I just want to develop some of these ideas, kind of more the between the lines of the commentary, is I'm expecting to see the way this pattern is going to unfold. It should continue to contract, and we should see this expansion. And what we don't know, I don't expect we're going to see this huge volatility like we did in the past. But having said that, that's probably what will happen. But we get up to 2,000, a little bit above that, should that occur here soon, then in the past, every time, 16, 17, 18, 1900, we saw the market get up to that even number, to the figure, and then start to really gyrate and see some volatility. And the typical decline has been between 60 and 80 points. So it's traded all the way to the point where it just about made you feel like it was never going to go up again, and then it went up. And it would penetrate through the number and it go to the next round number. And that's been the pattern. We'll see if that continues, but my expectation is that this one maybe will not go through this, because I do believe this is our final run on this particular pattern. Whether we end up finishing at 2072 or there's a 2110 or there's one more number above that, this is the finale. So I expect after that, when everybody has reversed and said, well, maybe it's going higher, then we'll be able to actually start to look at some numbers. And what we're going to see, it was interesting on, and I'll let Mitch cover this, but on the looking at the rotation on the database, we're not seeing anything drastic, but we are seeing a gradual. And if you look at the premier S&P 500 strategy, the Market 500, if you look at that, you will see that it's pulling back a little bit. We're about 80-20 on that strategy. Maybe we'll bring that up when we get into VPM, just to take a look at it so you can see what's going on there. But these webs are suggesting that this pattern is going to resolve on the upside. That's on a daily basis. This is the weekly web, which is still in a very, very tight pattern. See if I can open this up a little bit. But you can see it's very, very tight. There is some resistance bands above this. So once again, we're probably locked in this pattern. This is 1, 2, 3. This is the fourth week. There's probably going to be 6 to 8 as it turns out, unless we can get out this week. It's typically will be between 4 and 6 will be a pattern, and then we should see the next leg to the upside. And that's yet to be seen, especially let's see where we are now. We're just hanging around the 1970-34 level on the S&P. So that is that. We have been, let's go ahead and, let me not do it here, but let me go over to this. Let's take a look at a couple other indices that probably worth taking, like the IJR, because we're still seeing a little more movement in the small cap. So we're seeing, this is the weekly here. Let me break that full screen. This is actually showing you that this same pattern, we rallied up. I don't think we made a new high. We may have, and now we pull back in the pattern. There is a much different pattern unfolding here. If you remember, PPM 1, 2, and 3 were like 0.4828 and 0.32 on the S&P. Here we're looking at 0.29, which is still positive on the short term, but the PPM 2 and 3, which I'm in front of here, but they are let me bring that up on the screen just so you can see it easier. Those values are 0.29, 0.07, and 0.10. And those are not in trend modes. And in fact, not only that, the averages are quite close to each other, 109, 79, 108, 89, and 107, 77. So they've clustered. So this is one of the things that I've talked about. When a trend is ending, they will come very close together and they become vulnerable. Right now, there's enough positive for the PPM1 at 0.29 to keep a relative underlying bid in this market. So it's vulnerable, but not. It will have to dissipate even further. And this being a weekly graph, with it down already 0.75% on the day, and it's not really affecting the indicator much. So it would take quite a bit more movement to the downside to change that picture. And that 109.79, we're just below it. We're right in the closer 108.89. The current price on this is 108.10. So we're right there as far as the support goes right now. So small caps continuing to lag what the large caps are doing. I believe that story will continue on as we go. You're looking at, see, the index, the S&P is only down 0.39, so it's almost double the weakness that you're seeing there. And I'm not sure about the NASDAQ. We haven't really been covering that, but let's go to keep the show rolling here. Let's go ahead and look at the interest rates real quick. Let's look at the 10-year. We're on a weekly 10-year. 2.45 again, so we've moved all the way down at the lower end of this range, and 240 was excuse me, 240 was the bottom last time. So right when we looked like we're going to break out, we started talking about that. We even got some Fibonacci objectives here. You can see on where my cursor is here. That failed. That pattern failed, and now those have been negated, and we're going back down in the prices. So I suspect this is a little more stable market. It's much larger, maybe 12, 14 times. I don't know. I have to look into that. Used to always say the bond market was about 10 times larger than the stock market. It's way bigger than that now because of the increase in the debt that we have. So I'm not sure what it is, but this is a much bigger market, and when it starts to move, it's getting to the point where it's more like a currency market than it is any other type of trading market. It tends to, once it starts a trend, it continues in that direction for a while. It's hard to turn around. There's just such a huge amount of cash flow in these bonds right now, and that's not going to change for a long time. Maybe 20 or 30 years, this market's going to continue to be dominant until I'm not sure we can pay our debt off, but if we could, that would be about the only thing that would knock this down. But anyway, so we saw this where we were looking at VPM was long this index, which means it was looking for higher rates. That exited some time ago, and that was on April 25th. And I believe when Mitch goes through this, I believe we've exited some of the municipal bonds, but I think we still have a very strong position in most of the corporates and the treasuries. See if there's anything else here. So if there's turmoil going on, then theoretically gold would be doing something, right?
That's the thought.
Yeah. It's up a little bit here. I just brought up GLD, continuing to, I must have 3.2 on here. It shows, what? Maybe I have 1.2. I do have 3.2. I think it's a 1.2 model. I've got them both on. That's one of the things you can do at the trade station. You can put multiple strategies all in one symbol.
It is 1.2 optimized.
Yeah, that's what I figured. So there you go. That's the one that's been on forever, and
right.
It's all it's done is drifted down, and we're still down. What about 6%?
6%.
Yep.
6-7%. Yep.
Yep. Okay, I'm going to bring Mitch back for a second here, and we're going to move on. There's trying to make a really boring market into something exciting. Kind of hard to do. Hopefully some of our stock picks and things that we go through today will help highlight some good stuff. But this pattern here is just it's like a bad EKG. So let me go over it and get Mitch set up here on the dashboard, and I will get out of the way here.
All right.
So let me switch you out there. You should be fine now.
All right. So as I was saying, when you look at the sector chart for this week, you see that we had more sells than buys. Across the board, when you look at it, we had 681 sells, 291 buys. That's across both trade systems on a weekly basis. So on a net basis, that works out to be 390 sells this week versus last week. Now, when you compare that to a database of 18,000 securities, it's really not that large of a move. When you look at the optimized trade systems between these two, we had actually 260 thereabouts sells of those 300. So 100 of those moves were on the non-optimized trade systems. Now, if you take a look at the system and just skim through it, you'll see that there really isn't a whole lot of specific sectors. It's just been more of a across the board, diversified, walking away from the market as far as the investment exposure goes. When we jump over to the mutual fund side, you'll also see that there really wasn't a whole lot of activity to speak of. The same type of activity we saw on these sectors, we're also seeing in the mutual fund side. If we go to the high-level charts here, just skimming through it, we're not seeing any large concentrated activity across the board. Obviously, we do see a little bit of activity within the foreign small mid value side of things, likely to do with the activity that we saw over in the European side of things with the plane getting shot down. But really, there isn't any sort of concentrated selling or buying across the board. So it's just more the same, watching paint dry, watching grass grow. If we go over to the weekly research, this is where we keep an eye out on a lot of different iShares, single country ETFs, as well as some commonly used securities. This is just a great way to go, just to look at sort of a broad view of the market and just quickly glance at it. You can see, these little icons right here. Gray signifies flat, the light green signifies that it's long, and any darker colors signify that it's a brand new buy. So in this case, dark green signifies a brand new buy in Singapore. Not sure how many of you guys have Singapore in the portfolio, but that's really the only activity that we saw across all these different ETFs. There's 71 different securities in here between ETFs and mutual funds. We only had one of those tickers actually show any sort of activity, and that was Singapore of all things.
Hey, Mitch, when was the trade impact charts updated, or?
They were updated at the beginning of the month. Yep.
Okay, I thought they might have been just updated. I was looking at some of that stuff. So, okay, go ahead.
And then looking at the globe at a glance. Geez, it got tongue-tied on that one. there really wasn't any major shifts from negative to positive year to date, or vice versa. I think the real story is the movement in Russia last week. So if we go up to here and change it from a year to date measure to this last week, highlighting over it, you can see that really the big news story also affected the markets internationally as well, which was the ETF ERUS down 5% for the week. So that was by far the largest mover of the week, and this was to the downside. And as far as the different charts go, I mean, that's pretty much the largest newsworthy items to mention. I was thinking maybe, Bob, it'd be good to touch upon ERUS in a minute when it comes to looking at the stock of the day. Let's go ahead and we can go over to 2.0 and we can talk about the database.
Want me to do that for you there?
Yes, sir, if you could.
All right.
All right, so we'll jump over to the research side of things. And again, we'll go to the All Stats page. And like we've talked about before, the database still sits pretty heavily invested right now. 67% invested across all these securities, 18,000 securities. So 67% invested. This week's activity, you see that we had net negative activity on both the trade systems. So it's not that one activity was more neutral. They were both negative, but even then, it was a pretty minor movement across the board.
Yeah, it was non-material from the standpoint of the number of stocks, even though the ratios, what that looks at is the ratios of the buys and sells to determine what type of movement's going on in the database. Yeah, there's, from the database, I just make a note, is I talked about this a couple of weeks ago as we saw the database get up to about 70% and change. We backed off about 3%, and this is what you're going to see at this type of levels. You're going to see a rotation. Some of these trades are going to come in. Some of the trades that are coming off are trades that been on for a while, so you're still seeing some of the rotation out of trades, some of them going back as far as 2012, third and fourth quarter 2012. There's stuff that's still rolling out of being rolled out, and then things that were coming on first quarter of 2013 are rolling out. And there are some of these trades that are going to come on that are going to fail at this type of level. So there's going to be a rotation, but it's going to be very incremental. And for the most part, you're not going to see a large impact on an order run like we had for this week. You're just not going to see it hit and do much from a standpoint of your portfolios. You're lucky if you even saw a trade or two. I think there were 20 trades in the S&P.
Yeah.
Matter of fact, I'll let you run through your flow here, and then I want to bring up the S&P and take a look at that.
Oh, I got it pulled up right now. So that's actually where I was going next.
Okay.
Out of the S&P 500, we are now 85.5% invested, 85.6% to be exact. And as you had mentioned, we had 20 orders today.
That'd be wrong. We were 82.17 because that's last week.
I'm sorry, you're right.
He knows how to use the system, I swear. So you're looking at going from 14.4% in cash to 17.8. So it's very incremental. As I mentioned earlier, we're 80-20, and if you look up here, we had orders. We had 3 long entries and 17 exits. So we're seeing that same rotation on as far as that stuff goes. Just kind of curious if we look at the orders real quick here. Let's see, can we see that? But you can see here's all the stuff that's being sold out. There's quite a few, 3 buys, 17 sells. So, and that represents, because it's such a big portfolio, it's 500 stocks, just about a 2.5% downtick. Typically, when you look at the open positions here on this particular model, it's going to be about 1/4% or so. Sometimes it grows to be a little bit more. Here's a position that's 0.46, which is Alcoa, which is up 101% on this trade. So this a big trade on this particular stock, but it only increased I'm sure we have a trade impact chart on this one, right?
Yes, we do.
This would, the actual impact of any of these stocks are minimal to a point. Sometimes if you get the Netflix and some of these big trades, they might impact 1.5% or so on a portfolio like this. Very minor, and that's one of the things when you're constructing portfolios. If the bigger the dollars, if you use more stocks to a point, typically like $1 million plus accounts, if they have 40 or 50 stocks in there, they'll have a little less volatility, and you'll have a smaller bet size, which means that you'll have less impact on these charts, good or bad, but it does smooth out the overall volatility in the portfolio. So more is better on the larger to a point, but there is a point where you get too much. It takes approximately about $10 million to run this portfolio correctly. So to our knowledge, we have no advisor who has had one account that's $10 million that they've run this particular account in. We've had a couple big cases that we thought we might have an opportunity on, but they didn't mature or materialize is a better word, maybe.
Yeah, sadly enough. Maybe someday we could start a mutual fund or hedge fund around this.
There you go.
Wouldn't that be nice? Let's actually mention, or let's take a look at that trade impact chart since you mentioned it. So if we go over to the dashboard and click on trade impact charts, we can actually pull up the S&P 500, and we can take a look and see what type of impact these trades have had on this portfolio over time. So just pulling this up, changing it over to S&P 500, or the PPG 500, I should say, net. You can see that really there's only been a handful of securities over the life of this portfolio that has had more than a 1 percentage point impact. This one up here, MIR, had the largest one, had around 2%. So most of the trades on this have been pretty minimal impact to the overall portfolio. That being said, this strategy has done phenomenally well over the years. And that's what I got for today as far as moving through the database. Not a lot to talk about when it comes to the overall rotation. So again, the security that I thought might be good to take a look at is ERUS, and that one currently, let me see what that is. I had that pulled up just a second ago.
We've got 1-2 out there right now.
1-2 is the optimized. Actually, on a daily basis, if you look between optimized daily, weekly, it has it best. In fact, we got out of this security back on, I believe, July 1st.
Okay.
On the daily. So it looked like they knew that the Russians were going to be shooting down a plane back at the beginning of the month. Your crystal ball, right?
Yeah, I actually have one on my desk. I try it once in a while. It doesn't seem to work. But you can see this gap down on this stock here. It's gapped down pretty good, and we'll. It looks like we got minus 0.83. This is daily now. Minus 0.83, 0.33, and 0.10. So this gap down from the other day has continued to pressure. We're down another 287 today, 2.87 today. So there's definitely some pressure going on. But had you been playing this, the last time it got hurt pretty good, there was a couple really good buys on this stock. It's rebounded. Matter of fact, wasn't it year to date? I forget. Wasn't it positive year to date, or it went back negative again? It was down like 20-some% though, right? At one stage.
Yeah, last year it got hit really good.
Let's go to the weekly so we can see that.
Yeah, I think we talked about a couple weeks ago that that a brick strategy actually would have done fairly well, considering what was going on in those markets, just because they've had some pretty nice run-ups in spite of the weakness that they've had in a buy and hold strategy. And this one, the markets continue to get hammered over in Russia.
Well, I guess, maybe that's something, if you're aggressive, if you seek out those places where a lot of risk has been there, and maybe stick 1.2 on it, it's a good way to pick up some of these strategies and some of these positions when they're down and out, and still not guessing that you're buying them cheap, but buying them after these big breaks and putting the models on them. Be interesting if we could figure out how to put a strategy together to buy all the crud after they've broken down.
Yeah, one of my friends in the industry, back when the Fukushima disaster took place, he very briefly dabbled in the nuclear ETF just for a short time, just because it was a tremendous buying opportunity.
Yeah.
Because it, of course, right after that tsunami hit and destroyed that nuclear reactor.
So what is that ETF?
I think it's NLR or NCLR. I'll have to pull that up.
Find that out. That's because you can't say that without. We need to look at that. So, but this the Russian market is definitely has had its issues. This ETF doesn't go back very far anyway. Unfortunately, I tried to go back to a monthly, but it is what it would appear to me is still in a pretty much of a basing and bottoming pattern that's happening here. I've got, what did you say was the optimized model on this?
On the on ERUS, 1.2 weekly.
Okay, so I have that on there, and we're long it right now.
We are. We were flat going into today, so any losses on this really would be just today's.
Okay, so so the but this pattern is positive. Where we're, matter of fact, let me bring the whiteboard up, and then we'll move on to more interesting things. We've got a pretty good list today, so I don't want to. Let me just take a quick. But this is the kind of pattern that's going to come out of this. So once again, geopolitical risk equals opportunity. My very first company I worked for, that was our slogan: change equals opportunity. And so anyway, this would be kind of a pattern that we would expect. There's some Fibonacci projections right here, and this is actually, I think I'm utilizing the new VPM price objective tool, which is an all-encompass. It does long and up and down all in one tool. Several things that we combined, so it made it much simpler to use. But the bottom line is this pattern's really positive in spite of maybe the news. Good, probably better than even chance that I saw Oliver North talking about this situation, and he's saying that it takes the better part of 2 years to train somebody on how to use that missile launcher that they use to do this. And if you don't put a guy on that job in 2 weeks and give him the trigger to pull, but it would take a pretty skilled, at 33,000 feet, he said it would take a very skilled technician to be able to do that. So so I guess that's where some of the intelligence is pointing toward the Russians having something to do with it. Although there are Russians in the Ukraine that maybe not Russian, ex-Russian military. There's plenty of people around to run that equipment. It'd just be like here, if somebody got their hands on it here, there's plenty of guys hanging around the U.S. that used to be military, probably know how to run that equipment. Anyway, so I don't know if that's conclusive that Russia did it, but anyway. All right, let's move on.
All right, let's actually talk about some stocks here. There's a couple stocks that are going to be releasing earnings today. First up, let's talk about Netflix, NFLX, and that's currently optimized to the 1.2 weekly system. We're long this position currently, got in at the beginning of June 9th, at $429.50, and we're currently long it. Going into today, we were long it with a gain of 5%.
Okay, and it's doing well right now, up at 1% on a down day, so that's always good. One of the things that pops off the screen right away here, folks, and I think this is, well, it's interesting to me anyway. Hopefully, it will be to you. But when I look at what's out here, we've got 3 Fibonacci objectives here: 604, 671, and 713 are the objectives up here, and that's coming off of this pattern here, and that's really I guess Mitch was bringing up what were you saying? They had all kinds of Emmys or something that they're coming up for or something. All kinds of awards.
Oh yeah. I mean, if you're into the whole Emmy thing, they got that. I think they got 6 or so that they've been put on there. So it's interesting as far as the conventional broadcast market that they're able to crowd in on this with all these internet shows.
Yeah, and they're what's considered to be a disruptor. They're a new business model. They're messing with HBO, and somebody was pointing out, I'd never watched it, but the Orange and Black series has a whole their whole next season comes out, and they release the whole season like whenever it comes out, today or tomorrow it'll all be out. So I like the experience, having been a House of Cards fan.
The binging of the season all at once.
Yeah, it's like you just can't stop. And we tried pacing ourselves at 2 a day, and then tried to cut it back. So, but the season was over a little too fast. So there's pluses and minuses, but you can definitely satisfy whatever it is you're trying to do there. But yeah, so obviously they're a big disruptor. People are looking at. I think I saw a guy. There's a guy that's actually pretty good on CNBC, a tech guy. They moved him to New York from California. It's probably sad for him. He was in Southern California, but John Ford, and he's actually a really sharp guy. And he was talking about some of the things. I just happened to catch a little talk on Netflix this morning. He was talking about that they've managed to put a monetized number, and I didn't get it down really well, but when they look at how many new subscribers, I think they're looking at 500,000 or something on this cycle, and they've monetized it. So they're trying to figure out how to take what does it really mean when they're getting new subscribers and what they're doing. And I know that it seems odd, but I think a season of the House of Cards was like $100 million, but which there was some pretty big number they had to get to satisfy and make money, and they killed it. They did way more than everything just because of the popularity of that. So it ended up to be a joke, but the analysts had it as a problem beforehand, and it ended up to be a joke. I saw a great post the other day. I'll have to see when maybe I get Mitch to talk. I can pull it up here, but it was pretty good for all of us to consider while we're doing this stuff. So anyway, but the Netflix looks like a much higher objective, 604, 713. So if you own it, enjoy it. Don't be afraid of it. This stock has been really good. This would be the first time in a sequence of events. If we go back, see how far back. We had a big trade, and then it collapsed down from like 300 all the way down to 62 again. Then it goes to 62 to 400. It's been an amazing stock. We had a little blip here where we were in and out. We're back in. This pattern looks much more robust. And when you add up the last 3 or 4 trades, it's a big number in net returns, and the trade impact on any portfolio that's had this in there is huge. Yep. It's a very, very big number, and in the upwards of 8-9% on most portfolios just in the last 3 trades. So it represents a nice chunk of what you're doing. It's just I noticed that when we had the chart last month, the EEM has continued. It was at 50.27% of all the gains that were made on that. That represent 50% of I guess the accumulative gains it's the biggest player. And now we just the other day another 13% trade. So I don't know how big the trade was, but my guess it was another 4 or 5% net impact on that portfolio when we get the update in a few weeks here when we update those trade impact charts. So anyway, yeah, just these trades do matter. And as I've talked about, I know we did this in Process Warriors, just to bring a little tidbit, is that usually somewhere between 6 and 8 stocks makes all the money in a 20 stock portfolio. You typically will own somewhere between 15 and 19 stocks, and 6 or 8 of them are going to make all the money in any given positive cycle. So it's very important. That's why we encourage you to keep the trades on and rotate the when you're updating your strategies, you rotate the ones that don't have positions. Don't mess with the ones that do. Let VPM take care of it. Most of the time, it's going to do a really good job getting you out, and it's probably going to lead you further down the golden brick road than you thought you could go. And that happens to all of us. I feel like I'm a pretty good analyst with all this stuff, and I've been known to think this must be the end, and it was about halfway. So no one knows how these stocks are going to run. This one, Netflix, was really a classic. When we got to the old highs, it felt expensive. Then it almost doubled from there. Yeah. So you just can't judge them that way. So let's move on.
Next up on the list is another favorite, Chipotle. Had that for lunch yesterday. It was a nice anniversary lunch there.
Don't tell me that. Don't tell me that. Okay. I'm gonna keep this straight here. Okay, go ahead.
We're currently along this. We got.
I need a symbol name. I need that.
CMG.
CMG.
Yes, sir.
Okay. Yeah. Oh man, Mitch. Okay. I was going to send you some open table suggestions. Well, anyway.
Yesterday we had the kids with us, so that wasn't going to work. Saturday was the day that we really celebrated. But anyway, we're long. This been long since June 16th. Got in at 587.03, and we're currently flat on this. So it looks like we're waiting for today's earnings to see what's going to really happen with this stock.
Okay. Yeah, the inside joke, folks, is he who has been in several marriages is trying to keep Mitch on one. So making suggestions on how to take the princess out when it's time. Anyway, so this stock here is similar. There's no current objectives that are being played out as far as a VPM price projection tool is not giving us anything. The pattern has been recognized. It won't take much. A little movement above this high would probably get some nice targets to the upside. And this has been another, over the years, just another monster stock. And it's just there's a lot of money in beans and burritos and beans and what do we call them, enchiladas and all that stuff. So it's pretty crazy.
Anybody that has both Netflix and Chipotle, if you haven't already, they did like a little documentary about Chipotle on Netflix, of all things. So you can actually pull that up there. It's really a great way to get a little bit of insight into how this company came around, the story behind it, and it's just a fun little watch. I think it's about half hour. But yeah, I mean, this has done awesome within a lot of portfolios over the years. This is another fun one. Great story to have.
Yeah, they are. They're making some money with some beans, that's for sure.
And their food's pretty good.
Yeah, I call it dog food, so it's any of that stuff. So I'm not a big fan of much any along those lines. But anyway, so no objectives. PPMs, let's check that out real quick before we take off here. Let me put that up in the middle here of Mitch and I. And they are 146, 116, or 16, and 34. So the middle one is not in a trend mode, but two of them are, and the short-term PPM 1 is 1.6%. That's just screaming. The probability is that price is 579.41. With this thing being down, you can buy blindfolded at 579.40. The old days when my old nickname was Dr. Given, I would be telling you it's a given. Just if you see anything that looks like 579 anything, you should be buying this stock. And from a trending standpoint, it looks pretty solid there from that standpoint. And certainly at that number, you'll get a bounce back toward the highs, which is 616. So that's a nice $25 trade, $30 trade. That'd be a good trade even from a trading standpoint. So anyway, next.
All right. An advisor wrote in and asked about mutual funds. So let's pull up VWITX.
C as in Charlie X?
Victor WITX.
TX. Okay.
This is the Vanguard Intermediate Term Tax Exempt Bond Fund.
Okay, after all that, it's almost impossible to see because, of course, I didn't put my glasses in. So it's VWITX. Okay, here we go. We're in business now.
And we're also on the 1.2 weekly on this, long since October 28th of 2013. So we've been in it for a little while now.
Yeah, this is one of those trending environments I was talking about just a little bit ago. These are the kind of symbols that will probably be the first to roll out when the markets start to roll over. That should be some kind of line. We can have it rolls out before it rolls over or something. But the trends here are pretty flat at the moment. So there's some vulnerability with only they're just completely flat. So this thing has no upward momentum at the moment. So it is vulnerable to any kind of move down toward. Let me bring up these numbers here. So was there any further question? Just wanted it covered.
Just wanted thoughts on a number of these bonds.
Okay. So we're looking at the averages are 1413, 1408, and 1395. So much below that. So these obviously are going to update later when we get a tick and a evaluation on this at the end of the day. So under the 1395 level at close this week, it's going to set some vulnerability, and I would suggest that looking at this thing, there is some probability for an exit if we trade down below and maintain that. But I wouldn't be trying to front run this thing. So a lot of folks. I've had questions over the years and people wanting to know, is this thing close to selling yet? And it's, sort of like a dog chasing a car. What do you do? What would he do if he caught it? Right. It's like, what does it matter? It's even a sell or it's not a sell. If it's close, then it's close. But, you need to really wait for the sell signal to come. And, but I wouldn't be worrying about this a lot. Some of these PPMs look like they're trying to turn up. So I think the end of the week is going to tell you more about this stock because it will be a weekly close of the Friday NAV, not today's NAV, that's going to cause it. So if it is under 1395, I don't know, that would be a pretty big move actually. 10%, so a buck. Yeah, that would be. Yeah, you'd look at about a 3% move, 3.5% move to get down there. That's not going to happen. So, but under that on Friday would be an issue, I think, and you would have to. You'd probably be looking at possibility of a sale. Now, what is this?
It's an intermediate term bond.
Okay, so bonds.
Bonds.
Yeah, so we were just talking about, and that'd be kind of interesting because of the way we were talking about the treasuries earlier. And I don't know if you covered the rotation in the treasuries when we were there in the mutual funds. We probably should have. I wanted to look at that a little closer. We can buzz back. We have a whole 1 minute to go. Probably not. But anyway, yeah, so this thing is certainly flattened out. There is some vulnerability for this thing to roll over. I guess maybe if you're looking at putting more money in this thing, I would wait till Monday to see if it's still how it's hanging in.
Yeah.
You can pay up a little bit. It's a bond fund. I don't think you're going to have a lot to go there. There is some objectives up here. The Fibonacci at, let's see, let me bring that up, and then this will finish off the day. The targets are 1435 to 1450. So, that's a pretty decent move up there. So I would. Like I said, I would watch and see how this does on the support here. I would not try to front run or get nervous about this. Just look at it. There is some vulnerability to the downside that we could see an exit if we were down below 1395, maybe 1390 on Friday. But that's several days from now, so I would hang in there. I do expect to see this. The market has actually just been maintaining down at this 1480, down 825 at 1970. It's just been stuck since we've been talking for the last hour. There's just been no movement there at all. So anyway, it looks like we are about done unless you got anything to comment on, Mitch.
Just a quick note in regards to those bond funds. It was a couple weeks ago that we did see a little bit of selling activity on the municipal bond space, but we're still 90% to 85% invested between the taxable and municipal bonds. So we're still heavily invested, although a lot of the bond funds out there look just like this pattern where we got in a little while ago and now we've just sort of trailed off, and we're just waiting for the next move up or down.
Yeah, and if the treasuries have anything to do, and it will go over just a minute or so, the treasuries have anything to do with it, there's some definitely bias to the downside. So in this stock, since it doesn't, I was talking about it as if it were a stock-related portfolio. Since it's bonds, it's the opposite of what I was saying. This has more upside uptick today than downside. I think there's we're seeing general movement in the bonds to the upside today as far as prices. So we should be in good shape there. So folks, don't forget, Friday's our next show. Summertime is here, and we'll go ahead and look forward to talking to you then. But please send anything you would like us to cover. We'd love to have a whole show just guided by you folks. It'd be a lot more fun for us. And maybe for you too. So anyway, thanks for coming, and we will be talking to you on Friday morning and noon Eastern time. Take care, and we'll see you then.